Assalamualaikum. Welcome to the ATX revision kit question number 1. So make sure that you have your Kaplan revision kit, the Finance Act 2024. Okay, as you can see on the screen, the one which I have is Kaplan revision kit, which is applicable for your exam from June 2025 to March 2026. So now I'm going to take you through the revision kit. This is the soft copy that I have. Make sure that you have the Kaplan kit with you. And if you are doing ATX, make sure that you follow the Kaplan kit. So there are total 66 questions as you can see on the screen. You see, starting with question number 1. And in this video, we are going to solve question number 1, that is Gail and bread. Okay, so as you can see, these questions are grouped. These are section A questions. Okay, all these questions from 1 to 21 are section A questions and the balance are section B questions. Section A is a 50 marks question. Okay, and question 1 to 10, 1 to 9 is individual, and 10 to 21 is corporate business taxation. Okay, then we have all this, as you can see here. We have capital taxes, multi-tax with overseas, personal finance. They have been grouped. Family company, then we have groups, consortia, overseas, so they are grouped. Okay, so when you're doing your revision kit planning, after you have watched my ATX lectures, of course, you can pick in any order you can do those questions. Okay, so now I'm going to take you straight away to question number 1. Okay, Gail and Bright. Make sure that you have gone through this question well, you have read it. Okay, because I'm not going to read the entire question here. I'm assuming you have gone through the question at least once. So straight away, I'm going to go through the exhibits and start doing the answer. Okay, we'll take you through how to answer ATX questions. It's very important. We are finished with the lectures. 28 lectures in total. You can always go back to my ATX revision ATX lecture playlist and watch out my lectures, and then come back here and you will get all the solutions for revision kit questions under my revision kit ATX revision kit playlist. Okay, so straight away we are going to go to the exhibit number 4, because that's where we have been told what we have to do. So first you have to correct the error. See, there are no arithmetical errors, but there are some technical errors that has been done in the schedule that has been prepared by some junior clerk. Okay, this is the schedule. Wait a minute. Yes, this exhibit 2. So exhibit 2, this is the schedule that is prepared by Mill. As you can see, from the sale proceed, he have deduct the cost and he have taken indexation allowance. Here itself, you can see the mistake. Okay, you see, we do not take indexation till June 2025. It is till 2017 we take. So there is still one mistake we've identified. Okay. Next, you can see they have got the chargeable gain and they have deducted the corporation tax. But remember, in order to find the cash that is available, read the question, cash available, you do not deduct tax from chargeable gain. You deduct tax from the sale proceed. Another mistake is here. Already 2 errors you have identified. And the third, dividend, you have deducted corporation tax. Remember, we do not deduct corporation tax from dividend because they are not chargeable to corporation tax. Third mistake. Okay, so that's what they have asked in the requirement 4, exhibit 4, I'm sorry. They have told to correct the error. Okay, you have to identify and explain. First, identify the error, the 3 errors, and explain any error. Okay, next, you have been given the indexation factor. You see, it is till December 2017. Beyond this, you do not have any indexation factor. So you have to decide whether you will take this or this. It is based on the date when you are selling. Next, so that's about this. It's about correcting the errors for 11 marks. Okay, remember, you don't have to just explain and identify. You have to calculate the correct amount also. You see, calculate the correct amount also. So 3 requirements are here: identify, explain, and correct. Calculate. So that's there. Part B, you have to use, see, the exhibits that you have to use are given next to it. So you don't have to worry which exhibit to refer to. If you see part A, you have to use both your exhibits, 1 and 2. For calculation, it's or 2, but for the dates and all, you might need exhibit 1. Next, payment to Gail. So this is about Gail. And here, again, the question is bonus versus dividend question. This is a very straightforward question. You have to calculate the additional tax and NIC. And also, any reduction in corporation tax for this too. Most students have omitted that corporation tax saving. They did not take this into account. So make sure that you do it. Okay. Because of the cash realized by A as a proposed transaction 1 and 2. Okay. Remember the cash that they will get from the 2 transactions. These are the 2 transactions they are talking about. In exhibit 1, you will get it. This is transaction 1. This is transaction 2. This is about Gail who wants to raise some fund. So he's going to raise the fund like this. They are in the group. Okay. So Z will sell. Okay. So first transaction, Z is going to sell. Z is a part of the group with Gail will sell the building that they have received. Okay. They are going to sell the building to some outsider. Next, A will sell the share capital of Z. So one is selling of asset, the other one is selling of share. And then they will give that amount to Gail in the form of bonus or dividend. Okay. So that's that. So you have to now calculate additional tax, NIC and corporation tax saving. Then you have been given the annual salary. Whether it is bonus, whether it is dividend, that you have to calculate one figure only for both, and salary you have to take into account. Okay. So assuming Gail has a salary of 85,000 and the income tax liability they have given, if the annual salary was 85,000, this is the income tax liability. You don't have to recalculate and waste time. You have to take this figure. So this is the only source of income, that is our salary, other than mentioned above, that is bonus or dividend. Next, for 9 marks. Then we have part C, again exhibit C, exhibit 1. This is a straightforward question. You do not have to rely on your other parts. But remember, part B you can't answer without answering part A. Because first you have to calculate the correct amount of cash that they need. That is in part A. You have to find the correct schedule. Then only you can find the bonus and the dividend correct amount. You understand? Then only you can find the additional tax and NIC. So they are linked to each other. Part C, it is not related. It is an ethical question for 5 marks. Ethical question you will always get in section A for 5 marks. That is a 50 marks question in ATX. Okay. So this is about the client not disclosing their income. So basically we have a standard approach to answer ethics question that I will show you when we answer ethics question. Okay. So since it's 5 marks, you have to give 5 points, 5 separate points. So here you have to state the matters that they need to consider and also disclosure of the error. Next, inheritance tax, exhibit 3. So for exhibit 3, see how did you see the nature of the question of ATX now? How the different types of tax are related, for corporation tax to income tax to inheritance tax to capital gain tax, everything is asked in the single question. Okay. So be prepared to tackle all the type of taxes in one single question. For that you have to be very good. You have to be a pro in all the various type of taxes. To understand the interlink, first you have to understand the tax in isolation. You have to understand how inheritance tax is calculated, how CGT, how income. Then only you can understand the interaction among the taxes. Next, this is also a question which you can answer without referring to the above parts. Explain the inheritance tax advantages of making lifetime gift to individuals. In general only. Your textbook knowledge will help you there. You can use my ATX lectures slide notes also. I've mentioned it there. There were 2 parts of inheritance tax that I've gone through. The first part, first lecture of inheritance, I've covered this. Next, they are giving a gift of 1,500 shares in a company to Gail. You have to calculate 3 things. Fall in value, then detailed explanation. See, detailed explanation. Always see whether they are asking for calculation or explanation of whether or not business property relief is available, and assume if they are available, how they will be calculated. So first, whether they are available or not. Second, assume if they are available, how they'll be calculated. One more thing I like to tell you, for inheritance tax, business property relief is a relief which is very frequently asked, like how business property, business asset disposal relief is asked for capital gain tax. Okay, there are other reliefs also which is tested, like rolled over relief, gift relief, but this relief is very frequently tested. So make sure that you know the rules of business property relief. Even if you don't know whether it applies to a question or not, at least by the assuming or just stating the condition that needs to be satisfied, you will get some marks. Okay, that's why all the reliefs, whether under inheritance, capital gain tax, corporation tax, income, you have to know. Mostly inheritance tax and capital gain tax, these two taxes has more reliefs compared to the other taxes. Then you have to state briefly other tax issues that will arise from the gift. Remember, if they ask other tax, do not rewrite what you have written. They are not asking about inheritance, they are asking about other type of taxes which will be considered at a later date. So all these three together 8 marks. So you have to apportion. Okay, so you can say 3 marks here and 3 marks here and 2 for calculation. Calculation usually is less marks compared to explanation. So now you have to assume today is 1st June 2025. What you're supposed to do, you have to respond to the instructions in the email from your manager. Okay, 40 marks, and professional skill marks is 10 marks. All your professional skills are tested. Your communication, are you writing it in the format that they have given? Then analysis and evaluation, are you using all the exhibits, calculating correctly using numbers? Skepticism, are you challenging the views, the figures that is calculated, assumptions, and commercial acumen? Are you showing that you have a general understanding of various type of taxes? Okay, so now let us start with part A, where we are going to explain and identify the error, and then we are going to correct the schedule. So now when I have to type the answer, basically I have to talk about the errors in the schedule, the 3 errors. So you can open your word processor. In your word processor, you can type the answer, and the questions on which you have to do calculations, you can use your Excel. So now I've opened my word, and now I'm going to first write. Remember, you have to write a proper subheading, the computation. So this is too small, I will make it big. Okay, the computation. So this I will put as a heading. Remember, this is my 50 marks question and my professional skill marks. One of my professional skill marks is communication, so I'll be tested on that. How will I get that communication skill marks? By doing an appropriate format. So I have to have proper heading, proper subheading, write in paragraphs, write 1 point for 1 mark, proper sentences. And when I write different points in one requirement, I have to leave one space. Okay, so 1 para for 1 point. That means 1 point I will identify, then I will elaborate on that. I will write it in 1 paragraph, leave a line, start the second point. That's how I'm going to do. So now, since there are 3 different points in the computation, so I'm going to write in 3 different paragraphs. So how do I know that I've not missed out anything? The most sensible strategy is start with the beginning. So when I go to the schedule, exhibit 2, that is prepared by Mill, the first error, okay, is the chargeable gain. Remember, this is a chargeable gain between A and Z. Okay, but if you have read your exhibit 1, your background, they say that A and Z are part of a group. So because they are part of a group, there will be no chargeable gain. Whatever the sale that took place will be at no gain, no loss. So you have to write it at no gain, no loss. So how are you going to write this answer? See, I could have straight away showed you the answer, right? But then it's a very passive way of learning. So my strategy is I will sit down and actually write the answer, because we need to write from scratch. You need to know how to build up points. Okay. So once you identify the first point, you write. How do you start? Immediately start by saying whether the treatment is correct or incorrect. So in this case, the chargeable gain that you have got, in this case, it is 18,450. Okay. So the chargeable gain that you have got is incorrect. Okay. So once you write it's incorrect, then you will write the correct treatment. First you write what is wrong, then you will write the correct treatment. That's the strategy. So under this, okay, I'll go down and in the computation I'll write down, okay, the chargeable gain. So the chargeable gain on the sale of the, which building is it? Simpson. Okay, Simpson building is incorrect. Please, it's my advice, when you're attempting revision kit questions, do not see the answer. Okay, first write whatever it is, whether it's incorrect, whether you have done very poorly, whether you're not sure, just write whatever you know. At least you will know the structure of answer once you read where you are lagging. Okay, what is the correct way of approaching answers? Okay, so now the sale of the building. Now the next line you are going to write the correct treatment. Okay, the sale of the building. Remember, there is an intergroup transaction in this scenario. Please understand, Gail is having shares in A and Z. Both A and Z are part of a 75% group. That is the whole scenario. Okay, that the information is given in exhibit 1. That's why I told you, when you come to this question, come prepared, read the exhibits, and I'm assuming you know what is the case study about, and we are quickly moving towards the answer, because I want to show you how to structure answer. Knowing the correct answer is not so important, but the way you structure your answer is very important. So the sale of the building, please write the date, on which date the sale took place. In case you forgot, you can always go back and refer to the dates. Okay, as you can see, the sale took place on 1st October 2021. A sold a building Simpson to Z. They both are part of the group because A acquired whole of the ordinary share of Z. You understand? In 1st Jan 2017. So 1st October 2021. So you have to write the date. Remember, whenever a sale takes place, always write the date. Why? Because there are two dates. One, when there's an intergroup transfer. The other date would be when you are selling to outside the group. When you are selling to an external party, that time there is a gain. But to calculate that gain, the cost that you are taking will be the base cost of the acquirer. Acquiree will take on the cost of the acquirer that they have taken at no gain, no loss. That's why very important to mention the date. Just writing the sale of the building not enough. Sometimes you might be having, there are 2 3 buildings that you are selling. Who knows what building we are talking about? But luckily in this case there is only one building that is sold. Still, date is very important, because in your answer, in your marking scheme, if you see later on in your revision kit, solutions are there in the Kaplan kit. You will see they have highlighted the date. That means highlighted things. Whatever is highlighted in your revision kit solution means examiner wants them in your answer. They are keywords. They have to be there in your answer for you to be given marks. Okay. So they have highlighted this 1st October. So for 1st October 2021 will have taken place. Will have taken place at no gain, no loss. Okay. See, you can refer this back to my lecture where I've started, where I've explained you 75% group, the capital gain group. Okay. The rule is mentioned there that anything sold among the 75% group, capital gain group, will be at no gain, no loss. That rule came from there. That's why you have to go through the lecture. Okay. This is why for tax, specifically for tax subject, because it's a very technical subject, you have to know the rules of tax. Without that, you can't attempt revision kit questions. If you directly jump to revision kit questions, because most of you must be thinking that going through the tax is a headache. Many of you do not want to go through the textbook at all. But when you jump to the revision kit like this, you will struggle there, because this paper is totally rule based and it is very objective, unlike some subjective paper like performance management or audit, where you can make up stuff and write. But here it's not like that. You either know it or you don't know it. So that's why even the pass marks for tax are very high, if you see. Even though syllabus wise is the lengthiest in the ACCA paper, but easiest paper is tax. That's what I would say. Okay, because you either know the answer, you don't know the answer, and all the rules are there in your Kaplan textbook. And if you do not want to read the textbook, it's fine. You can always refer back to my lectures. So in their video form, you can go through. I've covered all the concept that is needed for you to answer your revision questions. Okay, at no gain, no loss. So this portion has been highlighted from here to here. Okay, so I will also highlight. This portion has been highlighted in your answer. Next, because you have to mention why at no gain, no loss. Okay, so you see how we are developing answers, how one after the other the answers flowing, automatically the answer is coming. We first started with a subheading, that is computation. Then we picked the first item, that is incorrect, that is chargeable gain. Incorrect. Now we are writing the correct treatment because they are in the 75% group, capital gain group, no gain, no loss. So write the reason. Because A Limited. Okay, if you do not want to mention the whole name of the company is fine. Just writing A Limited is fine. And Z Limited were in a, see, they were in the past, they were, currently they are not, because A have sold all the shares of Z. So they have exited the group. Okay, so A were in a capital gains group. How do you know whether it's a 75% group or gains group? Very easy. If you're having anything of capital transaction taking place, like selling of building, shares, then it's a capital gain group. You have to refer to. Okay, they were in the capital gains group, because anyway, chargeable gain you can only utilize in the capital gain group only, not in the 75% group. So we are talking about chargeable gain. Look at the term, it's chargeable gain, not trading profit. If it was trading profit or something, then we would talk about 75% group. Okay, capital gain group, in bracket we are going to write that they are 75% group. A Limited owns at least, see, we don't know the actual percentage, but at least they must have owned this much because they are the group. At least 75% of Z Limited. Close the bracket. Now, what's the next point? How do you get the next point? We are still in the first point talking about chargeable gain and the group. Remember, when we talk about no gain, no loss, immediately the next point is base cost. So the next point, first is no gain, no loss. Second point is base cost. That means second mark. So accordingly, see, these are connecting words. Okay, accordingly, but, therefore, because you have to connect. You're writing sentences. You're not writing in bullet points. So when you connect from next sentence to another, use connecting words. This is purely your English language. Okay. So now Z Limited's base cost in the building is the amount. So what would be the Z Limited's base cost in the building is the amount paid for the building by A. See, building is passing from whom to whom? A to Z. A to Z. Whose base cost you have to calculate? A or Z? Z. Z is the purchaser of that building. His base cost you need, because he has to calculate capital gain later on when he sells to an outside group. So Z's base group in the building will be amount that A has paid. Okay, plus the indexation allowance, of course. This is a company. Building by A Limited, amount paid for by the building by A Limited plus indexation allowance. When you're talking about indexation allowance, even the indexation factor is wrong. So up to, write the correct date, up to December 2017. Since this is before than the no gain no loss transfer, your no gain no loss transfer was October 2021 and your indexation allowance is December, whichever is earlier. Let's say you have transferred in 2013, then you have to take indexation allowance up to 2030 because that is earlier. Anything earlier than December 2017 you can take, but anything after 2017 you can't take that. You can only take indexation allowance max up to December 2017. Okay. Since this is earlier, so not always is December 2017. Okay, differs from question to question, which is earlier. Since this is earlier, which is earlier, December 2017. Then the no gain, no loss transfer. So even this is highlighted. Okay. Next. So that point is over. Now we are moving to the next point. App would enter next para. What's next? Next mistake. You don't have to memorize. You can always refer back. Open your exhibit and keep it in front of you. The next mistake is in the corporation tax. Corporation tax you do not deduct from gain. You rather deduct it from the sale proceed to find the amount of cash. So that's the second mistake. So that's will write in the second point. But how do you start it? You have identified the mistake, but how do you start? So we'll start with the post-tax profit. Okay. So the what do you want to find? The post-tax profit. That means after the tax, what is the proceed that is remaining? So post-tax proceed on the sale of the Simpson building. Okay. Will be the, you are writing the correct treatment. Will be the sale proceeds. Not the chargeable gain. In bracket you will write not the chargeable less the related corporation tax liability. So it is sale proceed minus corporation tax liability. Done. That's it. So the main thing which is highlighted is sale proceed. This has to be there. So it's sale proceed minus corporation tax. This has to be there in your answer. So how many marks are you getting for this question? This is an 8 marks question. First one is here, 1 mark, no gain, no loss. Second is the base cost, 2 marks. 3 marks, this sale proceed minus corporation tax. Now, next issue is the dividend. You have deducted corporation from dividend also. That is incorrect. So we'll start with dividend income. Okay. So dividend income received by UK companies is not subject to corporation tax. You have to write by this. Is not subject to corporation tax. So A will not have any corporation tax regarding the dividend that they have received from Z. Okay. Accordingly, first you will write the general point, general mistake. Then you will link it to the case study with A and Z. Okay. This is for any ACCA paper. So accordingly, A Limited will not have a corporation tax liability in respect of the dividend received from Z Limited. So in this case, the highlighted is dividend income not subject to corporation tax. Okay. Next, now the notes. So the three mistakes, errors we have identified. Mostly the first two, sorry, the first and the last one, first error and the third error, students identified. This is based on the examiner's report that I'm telling you. But the second error, that is that tax has to be deducted from sale proceeds, not chargeable gain, was not identified by many. This point has not been identified by many students. This shows your lack of preparation. Because if you see your past paper in ATX, most of the question they will always ask after tax proceed, post tax proceed. So make sure that you do enough questions on this. Okay. Now the notes. Okay, we have some notes also here. You see. See, this is regarding the computation we have told. Now there are two notes. So you have to talk about those notes also as well, whether they are correct or not. Okay. So the first note is, I do not think there will be chargeable gain because they are eligible for substantial shareholding exemption regarding the sale of Z Limited. Next, they think that there will be a degrouping charge regarding brand, but they do not know how to compute it. So the notes you will write as a separate subheading. This you get it from your requirement itself. Okay. So there are two notes and you will make sure that you write both the notes. When you write it, write note number 1 and 2. So this is where you are going to get your professional marks. Okay, note 1. So the first note is about SSE. So immediately we'll talk about SSE only. Substantial shareholding exemption. So we will list the condition that has to be there for SSE to apply. Okay. So now So, substantial shareholding exemption or SSE. This is available where a company sells shares in a trading company. So the first condition is you have to sell shares in a trading company. in a trading company. In a trading company out of a substantial shareholding. Okay. So what is the meaning of out of substantial shareholding? A shareholding of at least 10%. Okay, a shareholding of at least 10%. Now, the one which is highlighted here is this. Then trading company at least 10%. Next, holding period. So this is the first condition that you have to meet. The next one is the shareholding has to be owned for a continuous period of at least 12 months in the 6 years before the sale. Okay. So the substantial shareholding there is an issue with my keyboard actually. That's the thing. It's coming in capital, but never mind. As long as you understood the concept, there's all things doesn't matter so much. So the substantial shareholding must have been owned for a continuous period of at least 12 months in the 6 years prior to the sale. So SSC also you can see in my lectures. I've covered SSC as well. Okay. Okay. Next. So the thing which is highlighted here is the 12 months, this part. Now, so in this case, you have to see whether you are eligible for, first write the condition, then say whether you are eligible for this or not. If you go back here, okay, when did they take the shares? Exhibit 1. They have acquired the share 1st Jan 2017. And when are they selling? A is selling the shares 1st July 2025. So yes, in the 6 years, that if you see the previous 6 years, from 1st Jan 2017 to 1st July 2025, it's more than 6 years. And they have been owning it continuously for 12 months. And it's a trading company also. Okay, they have mentioned here in the beginning that it's a trading company. And since they have acquired more than 10%, so it's a substantial shareholding that they're disposing now. So in this case, you have to write accordingly. The SSC will be available on the sale. Next, point number 2. Okay. One more thing you can do is you can go here and you can go to bullet point numbering 1 and 2. And this also you can do. Okay, done. So now point number 2 is about degrouping charge and this thing. So now it's about an intangible asset. So now immediately we'll say that this intangible asset, the brand that has been transferred among the group, it will be at next tax neutral basis, right? And normally when you are having an intangible, it might give a rise to degrouping charge. But if an SSC applies on that sale of share, then no degrouping charge. So in this case, there will be no degrouping charge because SSC applies. See note 1. Okay, so that you have to write basically an intangible asset. What is the intangible asset here? The brand. So whenever something is of a particular nature, always mention that in your answer. If it's an intangible asset or investment asset or any type of asset, always mention. Okay, so this has been transferred to Z Limited on a tax neutral basis. This is the rule for this. When you're having an intangible asset selling among the group, the capital gain group, it is on a tax neutral basis within. This is also 6 years. Within 6 years of the sale of Z Limited. But this will not arise. Okay. See, so this will give rise to degrouping charge. This would give rise to degrouping charge in Z Limited. But this will not arise. Why? Because the SSC applies to the sale of shares in this case. In this case, not all the case. So always in your question, you have to see first whether SSC applies or not. Based on that, all the rest all will follow. If SSC does not apply, you have to calculate the degrouping charge. Because the SSC applies to the sale of shares. So there are two sales that took place. One is of shares, one is of building. So I will immediately select all this and I will go here and I will do the lowercase. Okay, everything else changes. This will be uppercase. Done. Next, cash that will be available to pay to Gail as a result of transaction 1 and 2. This I have to do in Excel, okay, to calculate. So let us quickly do that. But before doing that, let us highlight the important words here. Identifying that is an intangible asset and that tax neutral basis within 6 years of the sale of Z Limited is another point. This will not arise. Degrouping charge will not arise in this case because SSC applies. So now we are going to calculate the cash that is available to Gail as a result of the two transactions. Okay. So now I'm going to do it in Excel. So cash available to pay to Gail. As a result of transactions 1 and 2. So this is in bold. Okay. So now there are two things that has been sold. Simpson Building by Z and sale of Z Limited. So first we'll calculate the first one. Always follow the order. Sale of Simpson Building. Okay, we just write building. By Z Limited. Okay. In bold. Now, what is the sale proceed? So the sale proceed will get it from exhibit 2. Okay. In exhibit 1 is there. First, they have sold it for 140. No rollover relief. Okay. So the sale proceed is 140,000. I'll write here. 140,000. Next, we have to deduct the cost. So cost to A. Remember when we are taking for Z, sale of building by Z, we are taking the cost to A and indexation allowance, IA, from December to December 2017. Okay. Now, what is the cost? Again, we'll go here and see the cost in exhibit 1. If you see the cost, it is 75,000. Okay, in 1st October 2021, at no gain no loss, when you have transferred it, it was the cost to A was 75,000. So you will take 75,000, and which of the two indexation factor will you take? From December 2013 to December 2017, 0.097. So 75,000 is the cost that you will take. 75,000. Then you're going to take the indexation. When you're taking the indexation, it is this multiplied by 0.097. 7 to 75. So the total you will deduct. Just find the sum function of both this and use the sum function once again. From 140,000 you will deduct. So this is the chargeable gain, correct chargeable gain. Okay. Once you get this chargeable gain, remember dividend is after you deduct corporation tax from the proceed. So you need to find the corporation tax. So corporation tax will be on this gain. Okay, remember tax is on the gain, but cash that is available will be tax you have to deduct from proceed. So it is this simply into main rate. They have already mentioned that it's in a main rate. Always take the whole number. Do not take in decimal. So we are going to drop the decimal. Okay, 14,431. Now dividend paid to A Limited. So dividend paid to A Limited would be Remember, your sale proceed is 140,000. Deduct the corporation tax. This is this, not the chargeable gain. Done. So this is the dividend. Now, this, so you keep this dividend, you need it, and then you need the sale of Z Limited. So this is the sale of building, sale of Z Limited. This is in bold. Okay. So the sale proceed. The sale proceed is, they have already mentioned, but let us go again. They told that is 250,000 on 1st July 2025. Okay. And why did we find the dividend? Because in note 1 they have mentioned that the transaction 1, that Z will pay the dividend to A equal to the post-tax proceed of the sale, of that building sale. That's why we had to find the dividend. So sale proceed is 250,000. All this money that they are raising, they will give to Gail. That's what it has been written. So we want to find the amount that will be available to Gail. Now, second transaction, no much adjustment. So add this to, and this is the total amount that will go to Gail. So the total cash available for Gail. Done. Is this amount. Okay. So once you get this amount, what's next? We have answered part A. Okay. If you see your exhibit 4, we have corrected the error, also the notes. Okay. And got the correct amount. Then now we are moving to part B. So part A we have finished. Part B, payment to Gail. So bonus versus dividend. Now we have got the answer for A. This is regarding from transaction 1 and 2. And also we have been given the income tax with the salary of 85,000 will be 21,432. Okay. So now for this also we need Excel for part B. So which we are going to answer here. So first, as a bonus we'll take. If we are paying as a bonus, what is the additional tax? Bonus. So salary, that is employment income, is 85,000. Already given 85,000 fixed. Now bonus. Bonus you have to add. It is simply this amount. The total cost that will be available to Gail. So when you're taking 85,000, it will not copy because there's a formula attached to this. So when you want to copy this, here, I can go to and just take the value. When I take the value, make sure that I drop down the decimal. Okay. Next, your net income. So immediately you have to go to your income tax. Now we are doing what? Net income. So from corporation tax, from chargeable gain to corporation tax, now we have switched to income tax. Did you understand the shift? How quickly we are shifting from one to another? Okay. So this also I'm going to drop down decimal. Now, looking at the net income, since it's more than 125, 140, more than the highest level, no personal allowance. But still you have to show PA as 0. Personal allowance is 0. Then taxable income. So taxable income would be simply sum of this to still show the sum function even if it is 0. Next, once you get a taxable income, is your income tax. So income tax, how would you get? The first 37,700 into 20%. Done. You are an additional rate taxpayer, okay? So the next category is 87,440. In case you do not remember this figure, then simply take the additional rate category 125 minus 37,700, the basic and the additional. So the balance, this is the higher group. This into 40%. Okay. Now the balance at higher rate. This is a non-saving. Bonus is non-saving. So this, simply this minus 125,140. It is this. This will be taxed at 45%. So I'll put bracket, when I deduct, multiply 45%, done. And now I will add up. The sum function I will use and add up all the three. This is my total tax. I will drop down the decimal. Take it as a whole number, 193,459. So this is my total tax. Now from here you have to deduct the tax that have already been given, 21,432. You have to find additional tax, remember. So use the sum function and deduct this two, and this is the amount. Okay. So this is your addition. Remember the word additional they asked you. Because of that bonus, what is the additional income tax? So this tax was there when you are having 85,000 employment income, but that was already inside this. You understand? So that's why you have to take it out to find the additional. Now do not forget the NIC. A lot of people forget NIC. It's not only income tax. They also ask additional NIC. This is bonus. So there will be both employers class 1 and employees class 1 NIC that will get affected. So additional employees class 1 NIC. Okay. So that would be, you have to take this, your amount of bonus, because it's higher rate, additional at 2%. Additional will be at 2%. Do not forget to drop down the decimal. 7511. Next, employers. So I'll just copy paste it and I will just change the word employer. So when you are taking the employers, it is simply this again, sorry, the bonus multiply by 13.8%. Here also I will drop down the decimal and take the whole number. Okay, 51,828. And then remember they told the corporation tax saving. Why corporation tax saving when you're taking bonus? Because that bonus and employees class 1 NIC are deductible from your trading profit. Deductible from trading profit means your corporation tax will be saved. You do not have to pay corporation tax on both of them. So how are you going to get that reduction in corporation tax or corporation tax saving? Corporation tax CT. This is how you are going to get it. Take the bonus, add employers class 1 NIC, that is this, and take 25% because corporation tax is at the rate of main rate. 25% and drop down the decimal. So this is how much you are going to save. 106,849. So if this is how much you are going to save, just put a minus. Then simply, what is the total? So from here, additional income tax. Okay, just use the sum function. So additional income tax, add this employers and deduct the corporation tax saving. So the total is this 125,517. This is the total additional tax, additional taxes where a bonus is paid. Okay. Now we are going to compare this with the dividend. So this I will copy paste here. Done. Instead of bonus, we'll write dividend. Okay, just change the figure to dividend. It's the same figure for bonus and dividend only, nothing new. So this would be your net income. Here also no personal allowance. This is your taxable income. And when you calculate the income tax, now you have to be careful. You have dividend income. Okay, so when you're taking income tax, remember first 37,700, 20%, this is correct. But here when you go, it is not this. It is your 85,000 because your employment income is 85,000. Employment income is only non-savings. So 85,000 minus the basic into 40%, the higher rate. Okay, then 500, when you go here, it is 500 into 0%. This is dividend, that's why. And then you have to see whether you have anything in the higher rate before moving to addition. So you have, okay, it's 125, 140 minus the 85,000, that is from your non-savings, minus 500 of dividend. It is 39,640. So this 39,640 will be taxed at the higher rate, that is 33.75%, because we have moved to dividend now. And then the balance will be at the additional rate. So here we'll just insert. Here when you move, okay, it is simply this taxable income minus 125,140. This difference will be taxed at the additional rate of dividend into 39.35%. Enter. So now when you add, it is this. Okay. So now I'll be deducting 21,432. But before that, I need the total. So the total is 171,830. And from here I'm going to deduct 21,432. So it is 150,398. This is the total additional tax. Remember, dividend will not have an impact on class 1 employer or employee. It is only this. You have not been asked to give a conclusion, okay? So if you compare the two, 150,398 versus 124, bonus is better because less additional tax. So that you clearly have to write that there are no NIC or corporation tax implications when dividend is paid. Now moving to part C, when disclosure of error. So okay, so now we have moved to part C. I'm directly going to take you to the revision kit answers and show you, because now I'm confident that you know a bit of how to structure your answer from what I've shown you in part A. Okay, and part B we have done purely a calculation question. Now part C is an ethical question. This you can do in any order. Okay, maybe this could be your first question that you are attempting under section A. Now it's for 5 marks. So always you see there are many gaps in between. Why? Because 1 mark, 1 point. So first, always start whenever it's an ethical question. This is the structure. First, always say what is the error. Okay. Okay. So the error here is they are not disclosing the error. So the error made by Gail has to be disclosed to HMRC. That is the first thing you have to write. Next, you can only write to HMRC when you are authorized to do so. So you cannot disclose to HMRC unless you have that permission. This is the second point you have to write. You see, first is your duty. It must be disclosed. This is the first point you are going to write 1 mark for it. Next, you can't disclose until you get the permission. Okay, so that is the second point you have to write. They are highlighted. So either Gail can inform HMRC themselves or they may be authorized by their employers to do that. If they do not get the permission, they can't disclose. Next, you cannot continue to add for Gail if they do not disclose. This is the second thing. Do not come to cease to add or terminate the contract. No, start in steps, because that 5 bucks is just not given to say that you are going to cease. You are not going to add for the client. Alas, no. Build up your answer. Eventually, you will reach to that stage only. But to build up answer, check every ethical question. If you see, this is the structure, this is the layout. First, you have to disclose. Second, you can't disclose if you are not given the permission. Third, you cannot continue to add if they do not disclose. Fourth point, you have to see whether they have made any further errors. See how they have started. They are writing as we. This is how they are writing. Do not write your personal opinion there. I think it's unethical, or I think they should disclose because it's wrong. No, no personal language. Not as a first person. You have to write as a third person. We. Okay. So we can't continue to add the error. We should ascertain how the error arose and whether there are any further errors. This will show your skepticism skill. Is it only this error or are there any other errors? You have to question all these things. This is how you are going to get both your technical as well as skepticism skill marks. Next, always bring the money laundering into your case. This, slowly you're building. This is the fourth point. So you have to inform the money laundering officer. Okay, we should inform of the situation. Next, consequences. If you do not inform, what are the consequences? First, you have to refuse to disclose the error. If she refuses to disclose the error, you should no longer add for HMRC. You should no longer add, but you should not give any reason. Okay, always write that you should not add without giving reason. Don't say you will give reason. No. The last thing, this should be the last point in your ethical answer. That is, if they still continue to not disclose, it's a tax evasion. It's a tax evasion, and it's a criminal proceedings also under both tax and money laundering legislation. You see, this is the last point. So again, I will follow the order. First, they started as their duty. Gail has to disclose to HMRC. Second, either they should have the authority to disclose or they themselves can disclose, but if they do not have permission, they can't disclose. Third, can't continue to add for Gail if they do not disclose. Fourth, if there are any further errors. And then, if they refuse, what are the consequences? First, they should not add without giving reason. Last, it could be a tax evasion under money laundering or tax legislation. So this is the way you come to the solution for ethical questions. Okay, always follow the pattern of ethical questions. Make sure that you do other ethical questions as well. So you will see always this pattern. They always come at the end to money laundering, tax evasion, always the last point in your ethical answer. Now moving on to part D. So part D is about the advantages of making lifetime gift. Okay, so the first advantage, as you can see, this is the answer, is that if you are making any gift to an individual, it's a pet, and if the donor survives the gift by 7 years, then it will be exempt from inheritance tax. So in the first para, that's the first point that a candidate could think of. Okay, because this is often the easiest. See, when you have to give so many points like features or advantages or disadvantages, and if you're not sure where to begin, always start with the easiest, which is very obvious. Okay, things like pet, annual exemption. These things are very easy because every time in a question you use this. But some reliefs, okay, or some exemptions are not very common, like small gift exemption or regular gift out of income of marriage allowance. These exemptions not always tested, but in case you forgot, at least the basic you can write, like annual exemption if the donor survives, the tapper relief. Okay, so next, they also told if it's chargeable to that one, that is for BPR. Okay, so if the donor dies within 7 years, what happens? Then the gift will be chargeable to inheritance. Okay, and when it is charged to inheritance, what do? You take the value that is used at the time of gift, not the value at the time of death. It's very important that you mention this. That's why it's highlighted. Okay, so any increase in value is ignored, but for fall in value there's a relief. Okay, next, these are certain exemptions that are only available when you're making a lifetime gift. Remember the question they asked, lifetime gift. They are not available on your death state. So these are few exemptions. First, annual exemption of 3,000 each year. Remember 3,000 current year and 3,000 brought forward from the previous year. Then we have marriage exemption. Okay, any gifts to the in the consideration of marriage up to certain limits, because depending on who is gifting, parent, grandparent, or the partner or other relatives. Then the regular gift out of the income that do not affect the lifestyle of the donor. Next, small gift exemption of 250. So these are the four exemptions. So this is pure knowledge of your benefits of lifetime gift. Okay, mostly in inheritance tax they will ask you exemptions that are available on death state or lifetime gift. Okay, this is a very common and frequently asked questions that you can expect. Next, tapper relief. This happens when the donor lives more than 3 years, dies less than 7 years. So within 3 to 7 years, tapper relief. The more 1 year they are surviving, each year the tapper relief will keep on increasing by 20%. So that is what it is explained here. Okay, that means tax due will reduce by 20%, tapper relief percentage will increase by 20% for each additional year. Okay, so that part is over. You have mentioned almost everything. Now regarding the 1500 shares, the fall in value, so all these things you can take your own sweet time and read it, the top of top tips. But while I'm explaining, I make sure that I've answered the top tips as well. I always keep saying. Now the fall in value, so this is for Brad. Remember, when you have to take the value before share and after share, this is a related property issue. And related property for the purpose of inheritance is only the spouse. Only the spouse's interest you have to take. So Brad and his wife. Now, go back to the question. So here we don't need all these exhibits. We directly go to exhibit 3. That's what we need for our inheritance tax. So this is about gifting 1500 shares. Okay. And the value is given here. So you have been given the shares. Laura, Brad's wife, is having 4,500 and Brad is having 3,000, which is out of 10,000. Okay. So before gift, they are having 7,500 out of 10,000 means 75%. They are having 75%. So from 75 to 80%, the value is what? 290. This is before gift. After gift, Brad is giving how much? 1,500. So from 7,500, you are left with 1,500. That means after gift, you are having only 6,000. 6,000 means 60%. So it is this value 240, because from 51 to 60% holding. So 290 and 240 are the value you need for this 4,500 and 3,000. Okay. So now let's come back to this question. Okay. So you have to clearly write fall in value of their estate. So now combined ownership is 75%. But before, Brad is having 30, wife is having 45. After gift, Brad's ownership, remember Brad is giving 1,500 out of his 30%. So he'll be having only 15%. Brad will be having 50%, 15%, but wife will be having 45% only. That deduction is from Brad, not the wife. Total is now 60%. Okay. So remember the 290 and 240. We have got the value already based on the percentage holding. Before gift, Brad is having 3000, after 1500. So deduct it and this is the value. Okay. This 510, there is another way of doing it. It's given in the tutorial note. You can do it. And remember, if we ignore the related property rules, we are getting a lesser value, but we need the higher value. Okay. When you are taking the following value, really we are going by the higher value. Higher value is given under the related property rule, which is 510,000. Okay. Because it is always when you are using the related property, you are going to get a higher value. Okay. So here also is the same. The only difference is the value will change. Okay. Here the value is only the breadths. We are not taking the not taking the wife. So at 30%, what is his holding? And at 15%, what would be the holding? 205 and 190. Okay. So it is 205. You see, it's 26 to 50%, 30% holding, and now he's having 15%, so 190. So those two are the figure. Okay. So if you deduct it, the value is 330. So now the next question, they asked whether business property relief is available or not, and assume if they are available, how it will be calculated. That was the next requirement. So in this case, this will not be available if the business is dealing with security, stock or shares or land building or making investment. Remember, business property relief is for trading purpose. It has to be there for trading. If it's in the investment, securities, land and building, business property relief will not be available. So you have to determine the nature of this activity. For saying this line, you are going to get your professional skill marks, your commercial acumen. That you need to know the nature, because in the exhibit, the nature of the activity of omnium is not given. Now, assuming BPR is available, how it will be calculated is answered here, the next part. So now you have to state the conditions, same like SSE, substantial shareholding exemption, how you understand the condition, same BPR. Shares has to be owned for 2 years. And in this case, always see whether the condition is satisfied or not. At the end, this condition is satisfied. They have owned the shares for at least 2 years. Next, business property relief will not be available unless Gail is still owning the shares at Brad's death. That is his father's death, Gail is still owning it. And if all of the conditions above are satisfied, 100 business relief will be available at the rate of 100%. Remember the table I've explained in my lecture. For two situation, BPR is at 100% and two situation is at 50%. So this is at 100%. Why? Because Omnium is an unquoted company. It is given in the case studies that is an unquoted company. Okay. Now they also asked for other tax issues. Okay, other tax issues. Remember, do not copy paste inheritance. Other tax issues means one is stamp duty and one is capital gain tax, because this comes in, it's a capital nature. Okay, remember, when you're gifting share, it is not subject to stamp duty, number one. Number two, the gift of share, when you're taking it for capital gain tax purpose, disposal will be at the market value for gift. And another relief, gift holdover relief will be available if Omnium is a trading company. Okay, if it's a trading company, gift holdover relief will be available. So like this, you use proper subheadings like this and answer it with different paragraphs. Okay, here there are two types of taxes they have talked. One is CGT in one para, next is stamp duty in another para. Okay, so with this we have finished question number 1, Gail and Brad. Now at the end, you can see examiner's report is here. They are saying which area is done good by the students and on which part they often struggled. This while doing the question I have explained you. So I'm not going to take my time to go over this. And this is the marking scheme. As you can see, 1 mark for each. And this is the way professional skill marks are marked. This format, this way of this style of doing questions, you can apply in all your other 65 questions. Okay, so I'm not going to repeat the same thing in the other questions. Okay, so communication by going the general format, structure of the note, having headings, subheadings, using the correct language, then keeping our answer specific rather than general, and listening to the specific instructions made in the scenario. For example, If you're not checking the computation in the schedule, you are going wrong. Assuming it's correct and going ahead, you are making a mistake. They told you to correct the computation. That is your communication skill. Next, analysis and evaluation skill, how you'll be marked. Okay. So are you using the schedule to determine the error? Then are you using two or more figure from the scenario to determine the total cash? Then are you considering class 1 employee and employee's NIC? That is in part B regarding bonus. So basically from one place to another place, when you are accumulating what do I say, pieces of information, that is your analysis you are doing. Okay, you're evaluating and analyzing. And also you're demonstrating the ability of other taxes that is relevant to part B, income tax, NIC, and corporation tax. Skepticism, identification that information relating to activities is needed. That means to know that what activity omni is before you can say they're applicable for the relief. That is your skepticism skill. And also BPR can be withdrawn, to recognize that BPR can be withdrawn if they are not owning the shares at the brade's death. That is your skepticism. And commercial acumen, identifying the inheritance tax advantage of lifetime gifting, then related property valuation rules, and relevant tax factor for the gift of shares beside inheritance. That is your stamp duty and capital gain tax. So that's it for question number 1. I shall see you in question number 2. Meanwhile, do not forget to watch my other videos of revision kit as well as my lectures is out there. Thank you for watching. And if you have any doubt regarding first question, you can always comment below so that I can respond to you. Thank you.